everybody, this is John. This is another episode in our 401k series that we've been doing. The topic is, what to do with that old 401k plan once you leave a company. I get a lot of questions about that. So this particular episode is about the decision to roll over to an IRA. So just to recap what this, basically the four options are. Number one, when you have an old 401k plan, you could cash it out. You could do nothing. You could stay in the plan. If I was going to go to work for another employer and they had a 401k, I could, number three, I could roll to the new employer's 401k plan. And number four, I could roll it over to an IRA. So we're just going to focus on the decision to roll to an IRA today. In my career, I've done hundreds and hundreds, if not thousands, of meetings and consultations about this very topic. So I thought I'd put together a video just about the pros and cons, the important points as I see it. This is not an exhaustive pros and cons list, or maybe some that I'm leaving out, but these are the major ones that are important, at least in my eyes. You should always consult with a tax advisor or a professional before you actually pull the trigger on a decision like this. So number one on the pros list would be just more choices. I don't care if you have 100 choices in your 401k plan. It's nothing compared to the choices you have in a retirement in an IRA account. Most IRAs are brokerage IRAs, so you could buy stocks, bonds, CDs, ETFs. You could trade options. You can buy precious metals. There's ways that you can actually buy real estate in an IRA. Really, the choices are really unlimited. Whereas in the 401k plan, they're definitely limited to whatever they provide you. I've seen some plans they give you 10 choices and some maybe a few hundred, so it just varies. But more choices, definitely a pro to the IRA. Number two is accessibility. Not all 401k plans will allow you to access the money. Some say, hey, it's all or nothing. You can leave it all in the plan or you can take it all out of the plan. There's no partial withdrawal capability. So if I need some money, the 401k may or may not be the best option. It just depends on your particular plan. Every plan's got a different set of rules. In an IRA, I can take money out anytime I want to. I can do a bank wire. I can move money to my checking account. I can have them mail me a check. There's a lot of ways to access it, but very quickly. But that's definitely a pro for the IRA. Another option would be tax withholding. This is a big pro in the IRA. I can withhold any percentage I want. If I have partial withdrawal capability in the 401k plan and I take a withdrawal out, it's going to be mandatory federal withholding at 20%. Those are just the rules. What if I'm in a lower tax bracket and I want to withhold 10%? Well, I can do that in an IRA. I can't do that in a 401k plan. In an IRA, I could withhold 35%, I could withhold 5%, 12%, whatever suits me, I can do that. So that might be an advantage. Another option would be professional management. Maybe in retirement, I'm doing other things. I'm playing golf, I'm gardening, I'm just fishing, whatever. I just don't want to do the day-to-day management of my assets. Maybe it's just too much of a responsibility. Is it my life savings here? I can hire a professional to do that for me. So that may be an advantage where you may or may not have that option available to you in a 401k plan. Sometimes you do, but it may not be an option. Another pro would be Roth conversions. Now, some 401k plans offer what they call in-plan conversions, but it's not a given. It's very plan specific. Some do, some don't. If I have the money in an IRA, I roll over to an IRA, I can do a Roth conversion. So maybe I'm thinking ahead, maybe thinking, hey, I'm going to pay a little bit of tax on this conversion right now, and down the road I have this tax-free pot of money to access in retirement. I can do a Roth conversion in an IRA where I may or may not be able to in a 401k plan. Another pro would be just consolidation. Hey, maybe I already have an IRA and I just want to roll this money into my existing IRA, or maybe I have multiple 401k plans and I just want to kind of get everything on one pot. That might be an advantage, a consolidation for sure. Another thing that could be a pro is if you work for a publicly traded company and they allow you to purchase company stock inside your 401k plan. So I've seen some cases where there's company stock in a 401k plan. They have a really low cost basis and a really high market value. So they just contributed to it for years and years inside the 401k plan. So one thing you could do, and this is a pro to doing a rollover maybe, is that you could roll everything over to an IRA except for the company stock. What you can do with the company stock, you can send that to a brokerage account and you just pay tax on that cost basis that I talked about. And so now I have the rest of my money's in an IRA account, and I have the stock in a brokerage account. And so the difference between the cost basis and the market value, that's the net unrealized appreciation. So I could basically sell some of that stock, the next day, 10 years later, whenever I want to. The difference is taxed as a long-term capital gain instead of ordinary income. So that could be an advantage. It may or may not be, but it's at least worth discussing if you have company stock within a 401k plan. So let's talk about some of the cons to doing a rollover. So I mentioned one of the pros is more choices. Well, I would also say that's one of the cons, at least it could be. I remember back in the day, we'd go to Blockbuster Video, rent a movie, sitting there looking around at all the choices, and it's a little bit overwhelming. You may not know what to pick. Same thing with investments. Hey, I don't know what mutual fund to choose. I don't know what stock to pick, and maybe I'm not getting a lot of help. I just don't really know what to do. I've seen a few cases where people roll over and they don't do anything. It's just sitting in cash for a long time. Maybe they just don't, seek out help or guidance or whatnot. So that could be a big downer, to rolling over, is just the overwhelming amount of choices. So I think it's a pro, but it doesn't matter what I think. It's up to you and how you feel about that. Another option, another con to rolling over would be, what if I left the company, I was at least age 55, but I'm not quite 59 and a half yet. There's a thing called the age 55 rule. I'm going to do another video about this separately, so I won't get into the weeds on that, but basically, we all know that the age to access retirement funds without penalty is 59 and a half. Well, there's a special rule in a 401k plan. If I left that company at least age 55 and I'm not quite 59 and a half yet, and the 401k allowed me to withdraw on a partial basis when I leave the company, that money, there's no penalty for that. It's always taxable to me, but there's no penalty. So if I roll it over to an IRA, well, now it's 59 and a half. I don't have that age 55 rule available to me. So that's a very important consideration, and we'll talk about it in a separate video. So another con might be, if you're a person that does what's called a backdoor Roth conversion on a regular basis, and that's basically where you contribute money to a traditional IRA and then you immediately convert it to a Roth. That's called a backdoor Roth conversion. So the IRS basically says you have one IRA. You could have 10 IRAs, but the IRS looks at it like you have just one IRA. So that could be a big problem if you roll over to an IRA. You can't just say, hey, I'm going to have a separate IRA over here that I'm going to contribute to, and then I'm going to convert that to a Roth. That could definitely present a problem. Again, I won't get into the weeds on that, but if you do regularly do a backdoor Roth conversion, you might want to consider not rolling over to an IRA. So one of those other choices might be appropriate, staying in the plan, maybe rolling to another employer's 401k plan. Anyway, it's definitely a consideration. So another con might be, what if I have a loan outstanding? Many people take advantage of loans in a 401k plan. What if I left a company and I haven't quite paid this loan off yet? I have an outstanding balance. Well, maybe in the plan they'll offer you a period of time you can pay it back, or maybe they give you a coupon book and you can send in payments to pay that off over a period of time. But the moment I roll over to an IRA, if there's an outstanding balance on that loan, that's going to be a loan default. And it sounds like a bad word, but there's no credit implications. It just means that outstanding balance becomes a taxable event to me at that time. So definitely need to carefully consider that before you just roll over to an IRA. You definitely need to see, if you have a loan outstanding, you need to see what your options are for sure. So as you can see, there's a lot of moving parts to rolling over to an IRA. A lot of things to think about. And once you do it, it's an irreversible decision. So you really need to consult with a tax advisor, financial professional that really knows about this subject, and it's going to go down the list of all the different options that apply to your situation and what your needs are before you actually pull the trigger on this transaction. So my contact information is in the About section of my YouTube channel. If I can answer any questions for you, if you'd like me to produce another video on a particular topic, just feel free to reach out to me anytime, and thank you very much for watching.